Canadian investors holding rate-sensitive financials should watch for any fresh signals on the Fed's inflation framework, as today's commentary from Chair Warsh highlights potential metric shifts that could reshape positioning into year-end. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,438, up 1.7%. The NASDAQ Composite closed at 25,122, up 2.8%. The TSX Composite closed at 35,506, up 0.5%. Sentiment lifted on broad equity upside while Asian indices showed sharp moves, including South Korea's KOSPI surging nearly 13% early. The nearest central bank decision remains the Fed's September meeting, where markets are pricing limited cuts amid ongoing framework reviews. Earnings season is largely complete, leaving macro policy and sector rotation as the dominant drivers this week. Financials and materials appear to be leading on policy and supply chain headlines, while tech shows mixed follow-through. Yesterday's coverage of the rate cycle backdrop makes today's Warsh remarks on task forces a direct continuation of the same policy uncertainty thread. Tactical positioning monitors give investors a rules-based way to gauge when broad equity benchmarks are likely to extend gains. The approach aggregates futures positioning, sentiment readings, and valuation spreads into a single signal that flags periods of under or over exposure. Today's JP Morgan note that its monitor points to material upside for the benchmark makes the tactic immediately relevant. Implementation starts with pulling the latest CFTC positioning data and cross-checking it against a 20-day volume average on the SEPY or XIUETF. A rising signal combined with above-average volume supports adding a small tactical sleeve. The method has historically delivered its best results in the first 6 to 8 weeks after a volatility spike subsides. Yet it carries the risk of false positives when geopolitical headlines override positioning data. Retail investors can replicate the core logic inside most broker platforms by building a simple dashboard of net speculative length and price momentum. The bank's global market intelligence team, led by Andrew Tyler, described the current reading as a clear buy signal for the stock market benchmark. This quantitative layer sits alongside the ongoing Fed framework debate, giving Canadian investors an extra filter before rotating into financials or materials names that have already priced in policy stability. Now here's something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you entered a long position in a broad financials ETF last week on the belief that the Fed would stay data dependent. Your fill arrived at the prevailing mid-price, yet the real movement happened in the hours after Chair Warsh's comments on task forces and potential metric changes filtered through dealer desks. The mechanism works through forward guidance. When a central bank signals it may redefine its preferred inflation gauge, dealers immediately adjust the probability distribution of future rate paths, which reprices the entire yield curve and equity risk premium within minutes. In practice, this can widen the spread between the 2-year and 10-year Treasury futures by several basis points before most retail platforms even update their quotes. Warsh gave the standard answer that the PCE price index remains the proper measure, then immediately qualified it by noting that task forces might add new strategy language after next January. Former Fed economists flagged the remark as potentially confirming suspicions that the task forces serve as covers to redefine the inflation challenge away. The pro tip is to monitor the trimmed mean PCE releases and any accompanying Fed staff papers rather than waiting for the next FOMC statement. Professionals treat these documents as leading indicators of framework drift. Warsh's own 15-month-old speech at the IMF warned that frequent changes to the Fed's preferred metrics are beneath the high standing of the central bank and that credibility is the coin that purchases American economic strength. The biggest mistake with central bank metric shifts is assuming the old reaction function still holds. Instead, always cross-reference the latest task force language against the prior 15-month record of the same speaker before sizing the trade. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. We are monitoring JPM as a potential weekly hold on the NYSE in the financials sector. The strategy uses a tactical positioning entry on the broker research signal. The catalyst comes from the JP Morgan Global Markets team flagging its tactical positioning monitor as pointing to material upside for the benchmark. The technical setup watches for price to hold above the 20-day moving average, with volume exceeding the 20-day average on any retest of recent highs. Risk assessment sets a stop that would trigger on a close below the 50-day moving average or if Fed commentary turns hawkish, with maximum acceptable loss caped at 4%. The target is plus 3% to plus 6% over the weekly window if the monitor signal holds. Confidence sits at medium because the broker signal aligns with recent index strength, yet the Fed framework debate introduces one clear uncertainty. The setup demonstrates how to translate a single institutional research note into a disciplined entry checklist that includes both a volume filter and a moving average guardrail. Listeners learn to treat broker calls as one data point rather than a standalone trigger. The approach also shows how to layer a macro uncertainty check on top of the quantitative signal before committing capital. Yesterday's trade review covers the EPD weekly hold. We simulated buying at $38.68 on Monday open and exited at $38.12 on Thursday close. The result was a loss of 1.45% or $14.48 on a $1,000 position. The dividend compounding thesis did not overcome the macro headwinds that pressured energy infrastructure names. The current streak stands at 3 losses. The rule requires both a fundamental catalyst and a volume spike above the 20-day average before committing capital to dividend compounding trades in rate-sensitive sectors. Total trades now stand at 43. The win rate is 54% with 23 wins, 19 losses, and 1 break even. Cumulative profit and loss reaches $252.39. Matched window alpha versus the NASDAQ sits at plus 5.4% across 38 benchmark trades. The sum of per trade alpha reaches plus 10.4%. Average return per trade is 0.59%. The best trade delivered plus 20.11%, while the worst came in at minus 11.80%. The current streak remains 3 losses. The TradingView stock screener with custom volume filter lets users build screens that combine moving average crossovers with a minimum 1.5 times 20-day average volume requirement. Canadian investors running TFSA portfolios can set alerts that fire only when both conditions are met, reducing noise from low conviction moves. Access the feature inside the free tier by creating a custom scan and saving it to your watch list. The same volume filter can be applied to XIU or XIC when screening for tactical additions to a Canadian equity sleeve. Claude Projects for multi-source research summaries lets you upload earnings transcripts, central bank speeches, and sector notes into a single project workspace. The model returns a structured comparison of inflation measurement language across documents. This speeds up the kind of framework analysis discussed in today's investor education segment. The feature is available to Pro subscribers and works directly inside the browser. Users can also drop in the full text of Warsh's IMF speech from 15 months ago to contrast it with the latest Senate confirmation remarks. South Korea's KOSPI surged nearly 13% in early trading. The sharp move reflects local policy support and regional risk-on sentiment that can spill into global semiconductor and auto supply chains. The index advance occurred alongside Taiwan's reported 13.72% first-half GDP growth, the fastest since 1976, underscoring the broader Asia risk-on tone. Add EWC to the watch list for a potential retest of its 50-day moving average before considering any new Canadian equity exposure. Trump orders restrictions on export of critical minerals scrap. The policy directly affects domestic supply of battery and rare earth inputs, creating a potential tailwind for North American miners. White House officials confirmed the restrictions target scrap exports that could otherwise reach foreign competitors. Place a price alert on NEM at yesterday's close plus 3% and review any existing precious metals allocation for rebalancing. Anthropic AI models breached 3 organizations in tests. The disclosure highlights execution risk in AI infrastructure names that rely on unproven security layers. The incident occurred just over a week after OpenAI reported a similar breach during its own cybersecurity testing. Trim any single AI-themed ETF position that exceeds 8% of the TFSA to stay inside sector concentration limits. Open your brokerage platform, pull up the 20-day average volume for JPM, and set a price alert 1% above its most recent closing level. If the alert triggers with volume at least 1.5 times that average, note the exact time and decide whether the tactical signal still holds. Before we wrap, watch tomorrow for any follow-through on the JPM monitor signal once volume confirmation appears. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing, and if you'd rather watch than listen, find us on YouTube at NERA Network. Links in the show notes. This show comes to you from the NERA Network. If you want another sharp daily briefing, SpaceX Daily has you covered, the daily companion for following SpaceX as a public company, from Starship to the stock ticker. All our shows are free at neranetwork.com. The Do Positive Pod is the club for people who do something about it. Episodes and the dispatch wall at neranetwork.com, the DP Pod. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?